Hello and welcome to Simplicity in Stocks. In this video, we will consider 5 blue chip stocks that could potentially bounce back in 2025. The recent correction in the stock market has dampened sentiment among many investors. But we at Equitymaster believe that the bull market is not under threat and the long-term investors have nothing to worry about. It's just that in the short term, there could be some volatility. In spite of this market volatility, blue chip stocks have the ability to bounce back fast. They are like the go-to stocks for investors of all kinds, beginners or experienced. If the entire market were to rebound, then these stocks have a good chance of outperforming the broader market based on valuation upside alone. Only time will tell, and investors should be ready for any eventuality. In the stock market, it's better to prepare than predict. We believe investors would do well to invest in high quality stocks for the long term. And by high quality stocks, we mean solid blue chips that have stood the test of time. So, what are blue chip stocks? Blue chip stocks are well established and financially sound companies. They deliver moderate yet consistent returns for their shareholders. These companies are leaders in their respective sectors and are household names. These stocks attract all kinds of investors, irrespective of their experience in the stock market. Blue chips usually have clean accounts, prudent capital allocation, and strong competitive advantages. This makes them the perfect low-risk route to generating long-term wealth. They also pay generous dividends. Their consistent increase in revenue and profitability, stability in margins, cash flows, and dividends are all very desirable traits for investors. The stock prices of such companies usually compound over time as the market rewards them for their consistent performance. Buying the safest, sturdiest, and most well managed blue chip stocks when the market falls or when the market rebounds can be a good profit making opportunity. So let's look at 5 blue chip stocks you should have on your watch list. Now do keep in mind that this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that said, here are the 5 blue chips. 1. Hindustan Zinc. Incorporated in 1966, Hindustan Zinc has a rich experience of more than 5 decades in zinc and lead mining and smelting. It's a subsidiary of Vedanta Limited. Due to its excellent cash generation history, it's a well-known dividend stock, having paid out more than 700 billion rupees in dividends since 2013. The dividend payout for FY25 was 70.8%. The 5-year average dividend payout is 141.5%. Its debt is also moderate, with a debt-to-equity ratio of 0.3 at the end of FY24. The company's return on equity (ROE) and return on capital employed (ROCE) in FY24 were 51.1% and 57.9% respectively. Hindustan Zinc is the world's second biggest zinc producer, operates the world's third largest open pit mine, and the world's largest zinc mine in Rampura, Gucha, Rajasthan. The company is also one of the lowest cost producers of zinc globally and is India's only integrated producer of zinc, lead, and silver. Going forward, Hindustan Zinc is planning to be among the companies submitting bids for critical mineral blocks such as copper, lithium, nickel, cobalt, and other rare earth minerals. To achieve this, Hindustan Zinc has established a wholly owned subsidiary, Hind Metal Exploration Services Private Limited, aimed at systematically exploring mineral deposits. This subsidiary is expected to become operational within the next few months. Specific areas for exploration will be identified over the coming months. 2. Tata Motors. Tata Motors is a company that needs no introduction. This auto company makes passenger, utility, and commercial vehicles. It also provides vehicle financing, car service, spare parts, and accessories. Its vehicles are sold in over 100 countries. With its subsidiary, Jaguar Land Rover (JLR), it has a presence in the global luxury car market. It's also a market leader in India in the commercial vehicle segment. The company's main focus over the last few years has been EVs. It has a leading market share in India's passenger vehicle EV segment. Its domestic EV brands are a common sight on Indian roads such as the Nexon, Punch, Tiago, Curve and Tigor. Given the immense popularity of its brands, Tata Motors plans to grow its EV business aggressively. It plans to launch 10 new EVs by 2026. The company has also unveiled Tata.EV, its new brand identity for the EV market. The company is taking a big step towards its EV push and expanding its Sanand plant in Gujarat. The expansion of this plant will see the addition of a new lithium-ion battery production facility expected to be operational as early as 2025. The Tata Group's investment in lithium-ion batteries is part of its broader strategy to transition to EVs. The company is also working on developing its own electric vehicle charging infrastructure. As the world transitions from conventional vehicles to EVs, Tata Motors will make a name for itself globally, just as it has done in India. 3. HAL. Hindustan Aeronautics Limited, or HAL, plays a strategic role in India's defense ecosystem. It's the only Indian company having specialization in aircraft manufacturing, maintenance, and related services. The company's future is secure with multiple large orders. As of the end of FY24, HAL had an order backlog of Rs 940 billion, which could surpass even Rs 1.2 trillion if more anticipated high-profile orders were to come in. The Union Cabinet recently approved a 260 billion rupee procurement for 240 aero engines for the Sukhoi 30 MKI aircraft. This will be executed by HAL. The company is also expected to receive a new order from the Indian Air Force for 97 additional Tejas light combat aircraft. HAL's joint venture with the French company Safran, called Safal, will design, develop and produce new engine called Aravali for the Indian multi-role helicopter program. Apart from this, the company is also part of negotiations with the US firm General Electric Aerospace for the joint production of F414 engines in India. Going forward, the long-term order pipeline is robust. Projects like the Tejas Mark II, AMCA, TEDBF, IMRH, Light Combat Helicopter, and the ALH are all collectively estimated to provide HAL with a business opportunity of more than 4.5 trillion rupees over the next decade. IOC. Indian Oil Corporation Limited, IOC, is a prominent Government of India undertaking formed in 1964. It holds approximately 31%, the largest share of India's refining capacity. It owns and operates 11 out of India's 23 refineries with a refining capacity of 70.25 million metric tons per annum, MMTPA. It's currently increasing its capacity to 87.9 MMTPA by the end of this financial year. IOC's infrastructure is vast. Its refineries convert crude oil into essential fuels like petrol and diesel. Its 20,000 plus kilometer long pipeline network transports these fuels to all parts of the country. At the end of FY24, it had 99 LPG bottling plants, 129 aviation fuel stations, and over 61,000 customer touchpoints, such as petrol stations and LPG agencies. IOC is the second largest company in the domestic petrochemical market in the country. It's also a big petrochemical exporter with sales to over 70 countries. The company is now exploring the green hydrogen space. The management believes that oil will continue to be a dominant fuel for the next few years, but they are preparing for a transition which will involve a combination of green hydrogen and biofuels. One of its big objectives is converting 50% of its hydrogen production to green hydrogen by 2030. IOC plans to introduce hydrogen by using solar energy biomass gasification and biomethanation. To this end, the company will set up 7 kilotons per annum electrolysis plant at its Panipat refinery for Rs 20 billion by 2025. Hero MotoCorp. Hero MotoCorp has been the world's largest manufacturer of two-wheelers in terms of unit volume sold by a single company in a calendar year for more than 2 decades now. The company has some strong brands in both the bike segment and the scooter segment. Hero MotoCorp also sells electric scooters under the brand name Vida with a real-world range of 110 kilometers per charge. It holds 37% of the market share in the two-wheeler category. The company has the largest charging network in the country for two-wheelers in 100 plus cities with 850 plus stations and 2000 plus charging points. The company will also benefit from Ather Energy's IPO as the company holds a 39.7 stake in Ather Energy. A few months ago, the company purchased an additional 2.2% stake in the electric scooter maker for rupees 1.3 billion, taking the total valuation of Ather to roughly 56.4 billion rupees. The total value of Hero's stake in Ather Energy now stands at rupees 22.4 billion. Coming to the financials, in FY24, the company's revenue and net profit grew by 10.6% and 33.7% on a YOY basis. The company generated strong cash flows from operations, rupees 49 billion, which was up 88.3% year on year. Hero MotoCorp is debt-free with strong return ratios. The return on equity improved to rupees 21.2% in FY24 from 16.8% in FY23. The return on capital employed improved to 29.3% in FY24 from 23.8% in FY23. Well, there you go. These 5 blue chip stocks should definitely be on your watch list for 2025 for a potential bounce back. If you are considering buying any of these stocks, please do your due diligence and pay close attention to not only the fundamentals and the growth plans, but also the valuations of the stocks. Happy investing!